I'm Sharon Kreider. Welcome. I'm a CPA and enrolled agent in Sunnyvale, California. I teach tax update classes, and this is an update on the Affordable Care Act and the individual insurance mandate included in it. The Supreme Court has determined that the individual mandate is constitutional. It's constitutional because the penalty that's applied to the individual for not having insurance was determined by Chief Justice Roberts and the majority of the court to be a tax. Well, you and I as tax professionals know tax, penalty doesn't make any difference to us. We think penalties and tax pretty much go together on the tax return. So let's talk about this individual mandate. It starts in 2014, and in 2014 everyone needs to have insurance, affordable insurance provided by their employer perhaps, but if the employer does not provide insurance, the individual is required to buy their own insurance or pay a penalty. Vern Hoven and I presented a webcast for Paychecks, and that webcast had 2,500 tax professional viewers, and boy did we get a lot of questions. And let me tell you the top 3 questions that came in on the individual mandate. If I have insurance now, will the mandate affect me? If I have health insurance now, 2012, 2013, I have health insurance now, I have Medicare insurance, my employer provides insurance, I buy private insurance, I have Medicaid or the Children's Health Insurance Program, CHIPS, any insurance I have right now is grandfathered in. So I don't have to buy anything different if I have an insurance policy now. This is about the people who are uninsured. This is anticipated that we'll bring in about 32 million uninsured individuals. Majority of that, a big chunk, through the Medicaid expansion, where the Medicaid individuals on the expansion will be able to buy insurance. But this is for those people who are uninsured. And let me say that for you and me as tax professionals, this mandate is going to affect almost none of our clients because I have insurance, you have insurance, and our clients have insurance. So this is about the uninsured people, and only occasionally, rarely, do I have a client come in and say, oh, I don't have any health insurance, because our clients are able to afford the insurance. If I don't buy insurance, what's the penalty? Oh, the penalty is so small that it isn't really an incentive to go out and buy insurance, I'll tell you that. In 2014, when the mandate kicks in, the penalty is $95. Not $95 a month, $95 a year. It eventually, by 2016, goes up to $695 a year. Now, mom and dad have to provide insurance for their kids, but the penalty is limited to 3 times the $695, so it's a $2,085 penalty limit in maximum liability for a family in failure to provide the insurance. Penalty is very small. It is, of course, non-deductible, and no one wants to pay any penalty, but it is very small. This is question 3. If the penalty is so small and the IRS cannot lien or levy my income to collect it, why don't I just drop my insurance and buy insurance when I get sick? That certainly was a complaint about the mandated insurance in Massachusetts, that everyone was worried that people with insurance would not have insurance. They'd wait until they were sick to buy insurance. But the fact turned out to be that 97% of people in Massachusetts do have insurance. Whether it's subsidized or government, I don't know. But people did not, in mass, as anticipated, drop their insurance and wait until they were sick. Because the truth is, you and I have insurance for other reasons than a mandate from the government. We have insurance for security or the variety of reasons that we have health insurance now. I'm Sharon Kreider. This is our e-video alert on the Affordable Care Act and the insurance mandate. I'll see you at an update class in the fall.